Wow, it's really dumping outside today, folks. So it's Friday. What time? 2:27 in the day. I guess I normally would be working, but I knew it was going to be raining, so I didn't want to book anybody today. Even though I did go and buy myself some new boots. Yeah, I got built-in skis here. Aren't they cute? I had them on for a little bit, but they're still in need of being broken in, you know? Yeah, I'll be putting those on if I have to go outside, but it's really dumping. I don't know if you can see. It's pretty wet out there. Let me see what's going on. Let me see. Yeah. Oh. Well, what is today's date? March the 10th. Okay, so it's Friday, March the 10th, 2023. Been having a lot of phone calls. A lot of people with their emotional stuff going on. Yeah. Sometimes, when you get curly hair, you either go curly or crazy. And I decided I'm going to go curly. Sometimes when, you get a lot of people calling, whether it's your family or friends or whoever, neighbors or just passersby, we can't always process all the information that we get. And we have to pray for people. We got to pray for ourselves too. And it is always a good indication when you are dealing with yourself. If there's something that triggers you because someone is going through something and you get that same feeling, or maybe a trigger or PTSD, post-traumatic stress disorder, if you start feeling those anger issues or rage or like you got demons or something in there, then that's probably an indication that there's something spiritual still trapped in your emotions and the hurt emotions. So it's okay. We all have that. I deal with that myself. So that when we notice that angst or like a road ragey type of thing or something, like, demon possession feeling or whatever, that's when you can tell those things, hey, get out of here, hitchhikers. Any of you spirits of fear, control, because when you have to control something, it's because you feared something. Doubt, worry, all those types of feelings, that's when you can tell those things, get out of me. This is my temple. My temple. You cannot come and hitchhike on me or steal from me or come and try to dwell and hide and use me. So that's when you can tell those spirits, take a hike, get out of here, do not come back. It's called sweeping out your house. Like there's parables in the Bible of the woman who's sweeping out her house. When we have to do that, we have to organize. We have to try to know where things are. I mean, I think that is a really good parable, talking about the woman who had 10 coins and she lost one of them. And she swept her house clean to look for her last coin. And when she found it, she was rejoicing. Now, some people have said that 10 is the 10 commandments and that one that was lost is the Sabbath. Because of the way that we've been in captivity and they've taken the calendar and, pretty much, what do they call it? Kept us from the knowledge of knowing how to tell the time with the luminaries, especially if they do chemtrails and making a bunch of clouds, you can't really see what's going on with the sun. They're blocking it out. But that's another story. But the fact of the matter is that we don't always see in the whole picture. There's a lot to our lives. Sometimes, each one of us has a little knowledge about this or that. And that's why when we come together, we can share the knowledge that we know. It's not always good if we're at the opposite ends, but sometimes, like I've heard a teaching about how the word of God is like a two-edged sword, two sides, and it's sharp on both sides. And yeah, we can sword fight our brother, chop his ear off so that he doesn't want to hear us anymore. But if we can stick with the subject matter, you know, on both sides of the sharp end, if we can come to an agreement to go, well, what do you think about this? And what about that? And how about this? And could it mean that? And blah, blah, blah. If we keep chewing and chewing on the word, then it helps us to be able to get to the point. And I've heard someone say that the point of the sword is to make a hole in the ground so that you can plant a seed in there and then water it, and then it grows into a tree, and then you both can eat. So that's what they call midrashing, you know, when they're talking about the word and disagreeing about what does this mean? What does that mean? What about the Sabbath? Blah, 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 blah. What about the moon? What about that stuff? Stuff like that. It's okay to discuss these things in total length. You know, everybody's always wanting to say, oh, it's a long story short. But sometimes we need the long story. Sometimes we need a lifetime to look at the pattern of all of our lives. Sometimes you don't find out that you have something until your kid gets diagnosed with something later on, you know? So as you all meet as a family and watch one another, stay in close contact, you can kind of see the pattern. Oh yeah, my great-grandfather, this happened with her, and then this one, and then that. Oh, okay, well, that's showing up. Okay. So things happen in families, in your DNA, you know. But anyways, I thought that I would come on here and try to read some more. I was reading this one thing. Let me share the screen. See if I can locate exactly what we're looking for here. Okay, cool. This is that securitization thing that I was reading that was written by the International Currency Review, Michael something. And I thought maybe I would continue. I haven't looked at the last video, so I don't really remember if it was page 15 or 16, but I'm going to go ahead and start it with over here and see if I can expand this command plus. Good. So let's just get on the subject here. We're talking about securitization. You know, when you fill out the forms, like to get a loan or a disguised loan, you're thinking that you're buying something. Those chattel pieces of paper can be securitized under that Securitization Act from 1934. So this right here is saying that securitization violates state usury laws. It says that securitization violates state usury laws because the resulting effect interest rate typically exceeds legally allowable rates set by state usury laws. 5, there is substantial disagreement, conflicts in case law holdings among various U.S. court jurisdictions, and also within some judicial jurisdictions about some issues of these conflicts have not been resolved by the U.S. Supreme Court. 6, on these issues, even the cases for which the U.S. Supreme Court denied certiorari very substantially in their holdings. I remember that word, so I probably have read this page. The pertinent issues are as follows. What constitutes usury? 2, what costs should be included when calculating the effective cost of funds? 3, what types of forbearance qualify for applicability of usury laws? And 4, conditions for preemption of state usury laws, where the securitization is deemed an assignment of collateral. I think I mentioned to you before that I noticed when I went to the car dealership that they were making the car the collateral. And I said to them, the car is not the collateral. This chattel paper is the collateral. And then they stood up and walked away. It never got signed. And it was a no deal, obviously. But the effective cost of funds for the securitization transaction is not the advertised interest cost. Ooh. The investor's coupon rate of the ABS. I don't know what that is. American Banking, something securities, but rather the sum of the following elements. The greater of the sponsor's originator's annual cost of equity in percentages, or the percentage annual cash yield from the collateral in a situation where the special, what was that, SPV, special purpose vehicle or something? I can't remember what that was the last time I read it. But corporate documents expressly state that the excess spread should be paid to the sponsor. The excess spread should be subtracted from the resulting percentage. The excess spread is defined as the gross cash yield from the collateral minus the interest paid to investors minus the servicing expense paid to the servicer minus charge-offs, impaired collateral. So the amortized value difference, the difference prevailing between the market value of the collateral. Yeah, how much is that car? How much is that house? I mean, you know, how much can you get for this chattel piece of paper is what I'm thinking. And the amount raised from the ABS offering before bankers' fees, which is then amortized over the average life of the ABS bonds at a discount rate equal to the U.S. Treasury bond rate of same maturity, and then expressed as percentage of the market value of the collateral. This difference can range from 10 to 30% of the market value of the collateral and is highest where there is a senior-junior structure, and the junior first loss piece serves only as credit enhancement. Amortized total periodic transaction cost. The pre-offering transaction costs are amortized over the average life of the ABS, a rate equal to the interest rate on an equivalent term U.S. Treasury bond. The periodic transaction costs are then added to the amortized pre-offering transaction costs to obtain total periodic transaction costs, which is expressed as a percentage of the value of the pledged collateral. All right, so I need to reduce this down. How do I do this again? I think it's command minus. There we go. Because I need to be able to get up. Whoa, that's wild. Your screen is being observed. Oh no. Hang on. Oh, you know, I tell you, sometimes. All right, let's do command plus. Let's try one more. There we go. Let's get up here. Go up there. So the pre-offering transaction costs include external costs, underwriters, commissions, fees, filing fees, administrative costs, escrow, transfer agent, etc., marketing costs, accountants' fees, legal fees, and internal costs incurred solely because of the securitization transaction, namely costs incurred internally by the sponsor's originator, viz. Direct administrative costs, printing, etc. Periodic transaction costs equals administration costs, servicing fees, charge-off expenses, escrow costs. Foregone capital appreciation. The foregone average annual depreciation of the value of the collateral minus the interest rate on demand deposits, with the difference expressed as a percentage of the market value of the collateral. The sum of these four elements is typically greater than state law usury benchmark rates. So apparently each state has a law on usury benchmark rates, and they're saying that all these things, when they add up, is typically greater than that. So where the securitization is deemed a true sale, there is an implicit financing cost, which is typically usury, because it is equal to the sum of the following: base cost of capital. The greater of the sponsors or originators' annual weighted average cost of capital, or the annual percentage yield from the collateral, the amortized total periodic transaction cost, the pre-securitization transaction costs paid by the sponsor or originator and directly attributable to the offering, is amortized over the life of the ABS at a rate equivalent to the interest rate on an equivalent U.S. term U.S. Treasury bond. And the result, the amortized pre-securitization costs, is then added to the periodic transaction costs for only one period in order to obtain the total periodic transaction costs, which is then expressed as a percentage of the market value of the collateral. This is the amortized total periodic transaction costs. The pre-securitization transaction costs include external costs: underwriters, commission fees, filing fees, administrative costs, escrow, transfer agent, etc., marketing costs, accountants' fees, legal fees, etc., and internal costs incurred solely because of the securitization transaction, visa costs incurred internally by the sponsor, originator, namely direct administrative costs, printing, periodic transaction costs, admin costs, servicing fees, charge-off expenses, escrow costs. The value difference. This is the difference between the market value of the collateral and the amount raised from the ABS offering before bankers' fees, is amortized over the average life of the ABS bonds, and the result is then expressed as percentage of the market value of the collateral. This difference can range from 10 to 30%. Did I just read this whole thing all over again? It sounds like exactly what I just read a second ago. I hate it when this happens. And is highest where the senior, this is exactly, serves only as credit enhancement. Amortized unrealized losses. Any unrealized loss in the carrying amount of the collateral is amortized over the estimated. All right, amortized unrealized losses. Any unrealized loss in the carrying amount of the collateral is amortized over the estimated average life of the ABS. And the result for one period is expressed as a percentage of the book value of the collateral. Most asset-backed securities collateral data are recorded in financial statements at the lower of cost or market. Foregone capital appreciation. Foregone average annual depreciation of the value of the collateral minus the interest rate on demand deposits with the difference expressed as a percentage of the market value of the collateral. The sum of these elements is typically greater than the state law usury benchmark rates. Yeah, that was also on page 15. I just finished reading that. Sometimes I just wonder if maybe they cut and paste and it's exactly the same wording. I don't know. B, all true sale, disguised loan, and assignment securitizations are essentially tax evasion schemes. Wow. That's amazing. I love seeing this in print right here. This is good. In the United States, the applicable tax evasion statute is the U.S. Internal Revenue Code section 72017, which reads as follows: any person who willfully attempts in any manner to evade or defeat any tax imposed by this title or the payment thereof shall, in addition to other penalties provided by law, be guilty of a felony, and upon conviction thereof shall be fined not more than 100,000, 500,000 in the case of a corporation, or in prison not more than 5 years, or both, together with the cost of prosecution. So this is why, you got that thing, they talk about death and taxes, and they scare people out of their wits about paying your taxes, or else you're going to be guilty of a felony right here. Conviction, you can go to prison where you're going to have to pay a fine, blah, blah, blah. This right here is the whole reason why people pay taxes. But if these particular taxes, don't apply, like I don't own a house, I'm not buying a house. So there's no reason if I were to ever think I'm selling a house, because I'm not, that I'd have to pay taxes. But I did own a house. They told me I was the owner. I did pay yearly taxes on the house. And by the time I got swindled at Grace Harvest Church in Moore Park, California, and their member caused me to lose the house because he was trying to tell me that he could help me refinance the house, and he never did. And he used to be an ex-broker, and he'd helped 3 other people at their church, but this guy had me, all over the place doing different things and caused me to lose my house. So when the who would it be, bank was going to do a foreclosure on me, then they were going to sell the house from underneath of me. Well, I already put $85,000 down on that house when I bought it, and I already put money into it and invested into it and had a second HELOC to, make it look really good. So, I end up getting out of there just with $3,000 just to move my stuff out. And all of this money, if they're talking about all these different ways to make money, they somehow divided it amongst all of their peoples, their real estate people and the brokers and this and that. And then, come tax time, they want me to somehow pay taxes on the sale of that house. I was like, no, I didn't make $30,000 out of that, like you're saying. How about 3,000? I lost everything. I didn't make a profit. I did not make a profit. Therefore, I wasn't doing commerce. So luckily, the IRS forgave me of that. Just saying, I did not make the money. But right here, what I just finished reading, it's talking about all the different underwriters and the commissions and the fees and the marketing costs and the accounting fees, all that stuff. All of those types of things are in with that particular expense. So that, what this is trying to say is all of these things, they add up. Let's keep reading and see what else we got going on here. So under that statute that we just finished reading from the IRS or the Internal Revenue Code, section 72017, says under the statute and related case law, prosecutors must prove 3 elements beyond a reasonable doubt. So this might help right here. The actus reus, the guilty conduct. Well, I already know from the people that I have a bone to pick with from a church that that one particular person, he just over-talked. He couldn't deliver. He had guilty conduct, but I think because of the church that we went to, you know, they don't believe in sin. I think they're preterist type of church where they believe that we're in the millennial reign of Christ or something, and there's no such thing as sin anymore. So me knowing that they're teaching false teaching at that church, I was coming against the teaching going, that's wrong. No, there's still sin in the world. People still do really bad things. And you're doing it to me, that's for sure. But they didn't even want to give themselves any conscience of thinking that they're sinning against somebody or trespassing against someone, telling somebody to do something and not having anything to back it up. So as far as the guilty conduct, me as a criminologist, I understand, this says right here, which consists of an affirmative act and not merely an omission or failure to act. Yeah, well, they had a failure to act, and they weren't exactly saying that they did anything wrong, because they were like just believing in their mind that we're not doing anything wrong. We're trying to help her. No, you caused me harm is what you did. Anyways, right here, to act that constitutes evasion or an attempt to evade. Well, hey, big time. Sold their church, got rid of the tape ministry that was prophesying over me. Get rid of that. So that by their thing right there, they did constitute evasion, big time. Anyways, the assessment of a tax. We're talking about the tax or the payment of a tax. So me, on the other hand, I didn't do any evasion of any taxes or payment of any taxes because I didn't make any money. I lost my house going to a church, listening to their false teaching, and then nobody would help me. And, you know, when you have it in your mind that they are your brethren, that you're not supposed to go into the courts or to take your brethren to the courts, but they wouldn't even let me confront them in private. I confronted them in private, just one person, but they wouldn't let me bring 2 witnesses. It was difficult. It was really weird. And that's about as far as I can go. When you can't have other people go with you, all your friends abandon you and leave you, and you can't even find one person to stand with you, that's pretty bad. Hey, I'm just going to pat myself on the back with both hands. Because guess what? That is what happens to the prophets and to the disciples and to even our Savior. That's what happens. And so we have to count it all joy that we have been initiated into the brethren by having these trauma things done to us. Not fun. But anyways, I digress here. I'm just telling you a little bit of my my thing. So here's another one. Got to prove the mens rea or mental element of willfulness, the specific intent to violate an actual known legal duty. So we're talking here not so much about that church or those people that did me wrong. We're really talking about the bank. Now, a lot of these people, I will say, that you talk on the phone with or you go and talk to them in person, they literally do not know about this stuff that we just read over there. They do not know that's under a trust. They don't know anything about the Trading with the Enemy Act. They don't know anything about the Securitization Act. They don't even know any of this stuff. And I have a feeling that they got the job because they didn't know about that kind of stuff. Because they're going to keep these people as innocent and right upstanding as possible. It's the ones behind the scenes that do the securitization that know. So that's why I think we are needing to go to the trustee of the bank, because this trustee of the bank has to know this, unless they just put some new person up there and every year they switch them out. I don't know. But we have to go to the trustee of the bank, because this is the person that's swearing an oath he's going to do the upstanding thing, the right thing. And I have a feeling that this is why they are trying to keep the people to not know what's really going on, like all that stuff that I was reading back there. So in the case of true sale transactions, the tax evasion occurs because, let's find out, A, the sponsor determines the price at which the collateral is transferred to the special purpose vehicle. Wow. And hence can arbitrarily lower or increase the price to avoid capital gains taxes. You know, when I had my short sale and, you know, I was upside down, obviously. I had a HELOC. They gave me credit like 85,000. I'm like, oh, that's kind of interesting because I did an 85,000 payment down. Could it come out of that? Is that what that's all about? What's that all about? I thought it was interesting, you know. And you know, I don't know if it was 2008. My real estate lady customer, she had said, hey, if you got a HELOC, take all that money out, use it, because they're going to take it all away. And they did. So I only got to use like 40 grand of it, not 85,000. But when you had a short sale, they were willing to take what I paid for the house. What I paid for the house. And I said, no way, it's worth double. They go, no, because of all the other short sales around in your area, we have to go with the comps. It's lower. Like they were trying to lower it down on purpose. Then they even allowed the person who bought the house on the short sale to go as low as what I paid for it, and then get me off of that 40,000 HELOC and whatever else I owed. I'm like, that's pretty wild. They're really, really reducing it down. This is ridiculous. I literally sold the house for what I bought it for. And it was like 8 years old or something, you know? So this right here is what they're doing. They're arbitrarily lowering the price to avoid capital gains taxes. And they know that it's going to go up in price. You know, they're going to get their money that other way. So they're like, yeah, we'll let you go. We'll let you get off at, you know, what you bought it for. I'm like, yeah, what about that 85,000 I put down? Oh, you can stay in the house for a little bit longer. Yeah, you think I've been in here that long? Yeah, whatever. Anyways, I sent this whole thing to Wells Fargo so they could read it. I don't know if they're going to read it, but this right here lets us know. It being assumed here that the sponsor, who is the sponsor? Was it Fannie Mae, Freddie Mac? Who is a profit maximizing entity and will always act to minimize its own tax liability and to avoid any tax assessment. Oh yeah, because, oh no, they didn't get any taxes, but they're trying to put it on me. I was trying to get it. They were trying to get it and put it on me. I'm like, I don't think so. No, I didn't make anything. Nope. So I could see that. B, the sponsor typically retains a residual interest. Oh, okay. In the SPV in the form of IO and POs and junior pieces, which are typically taxed differently and on different tax basis compared with the original collateral. Hence, the sponsor can lower the price of the collateral upon transfer to the SPV and convert what would have been capital gains into a non-taxable basis in the SPZ residual. C, there is typically the requisite intent by the sponsor, evidenced by the arrangement of the transaction and the transfer of assets to the special purpose vehicle. Command 0. So I would imagine I could maybe look into my documents to see who would have been the sponsor. I don't know. It's obviously it's a trust. Anyways, here D, before securitization. Okay, I want to make sure, just want to make sure I'm not reading over the same thing. Okay, good. Page 18. Yeah, because I see some of these things, they looked exactly like what I had, already read. I don't want to reread the whole thing all over again. So before securitization, collateral is typically reported in the sponsor's financial statements at book value. Right there, baby. That's what we're talking about. I'm talking about that. So we're going to make our little note right here. I'm going to grab a little piece of paper, anything I can find, and hopefully, make a better note about this. D, I think that was page 18, on securitization is illegal. And we're talking about financial statements at book value. Book value. Yeah, financial statements. That's what I had asked Wells Fargo to give me their GAAP, generally accepted accounting procedures. I'd like to see the books. I'd like to have my account edited or audited, excuse me. And I'd like to know about their book entry stuff. They're not showing me any of that. But no, they want to show me that my signature is on a loan. I said, that's a disguised loan. I'm asking for you to show me documentary evidence of your book entry right here. Boom. And I think we've gone through this like 5 or 8 times now, back and forth. What is it, March now of 2023? And I started this, I don't know, last year. Probably around the same time. They have still not given me their book value or the sponsor's financial statements. Lower of cost or market under both American and international accounting standards. Loans and accounts receivable are typically not revalued to market value unless there has been some major impairment in value, which does not reflect true market values and results in effective tax evasion upon transfer of the collateral to the SPV because of any unrealized gain is not taxed. So I sent this document in all 58 pages to the office of the president of Wells Fargo. And the lady, she says, yeah, I got this stuff. I go, did you read it? I'll take a look at it. I go, did you read just the one page or all of it? That right there, that's the part that needed to be highlighted. I might need to make sure I highlight that because that's the part I was asking for them to give me an account, which they weren't. So they, of course, are going to send me some standard paper saying, no, you had a loan. This is your name. Use your signature. You lost it and you're a loser. So bye. See ya. Wouldn't want to be ya. That's pretty much, what I'm getting from them. But right here, the actus reus is manifested by the execution of the securitization transaction and transfer of assets to the special purpose vehicle. Oh, that's good to know. F, the mens rea These are the things that we have to prove. Or specific intent is manifested by the elaborate arrangements implicit in securitization transactions. The method of determination of the price of the collateral to be transferred to the special purpose vehicle, the objectives of securitization, and the sponsor's transfer of assets to the special purpose vehicle. G, the unpaid tax liability consists of foregone tax on the capital gains. Obviously, there wasn't any capital gains. From the collateral, well, let me see. Let me just think about this for a second. Yeah. Basically, I did a short sale of the house, and I think they didn't get capital gains because, I mean, they did use my credit to get a HELOC, but I obviously didn't use the whole HELOC because they cut me off, you know, because everybody was belly upping, you know. I'm just trying to work it out. I'm working out my salvation with fear and trembling. To avoid recognition onto capital and tax on any income, they didn't have any income from the collateral, which is converted into basis or other non-taxable forms. Oh, I'm pretty darn sure that they made a ton of money right there because the bank ended up getting, let me think. Okay, when you do a foreclosure, the bank ends up getting money. Boom. But when you do a sale, like a short sale to another person, they kind of, it doesn't, you know, the bank doesn't get the money. They just get into a new deal. Yeah, another disguised loan. Yeah. So I'm trying to figure this out. H, income from the collateral. And I'm saying collateral to mean the paper chattel behind the scenes, not so much the house, but that would have been taxable in the sponsor's financial statements, is converted into non-taxable basis in the form of the SPV's interest only and principal only securities. Part of the interest spread, the difference between the SPV's income and what it pays as interest and operating costs, is paid out to principal only holders. And this transforms interest into return of capital, or just capital repayment with no tax consequences. So on my piece of paper, I'm going to write H. That's the one right there where they got income. And they got it through the interest only and the principal only interest. Yeah, this is book value stuff we're talking right here. Because on the outlook of things, you know, when you're signing, look like you're signing some contract that says you're going to buy the house for this much, you're going to sell it for the same amount. Doesn't look like, it looks like it's a wash, right? And maybe somebody who was it that got a loss? They're trying to say the bank was the one that got a loss because they're acting like the bank was the one that owned you, that gave you the money. They didn't give you the money. They didn't give you the money. So this is what we want to talk about. Where did the money come from? Was it from the Treasury? I'm just asking. Was it from the Social Security number? Was it from my credits? Yeah, the whole issue here is, where did the money come from? That's what I'm targeting. Where did this money come from that you had such a loss? Because I don't think you had a loss. No, in fact, you had a gain because you got this stuff that's happening in the background interest only, principal only, securities, stuff that nobody else sees. I'm talking about the securities. Right, Karma? Yeah. What you doing? You playing with your toy? Cute. So right here, in the case of disguise loan or assignment securitization transactions, the tax evasion occurs right here because A, the sponsor determines the price at which the collateral is transferred to the SPV and hence can lower and increase the price of the collateral to avoid capital gains tax. Yeah, we've heard that already up there. B, the sponsor typically retains a residual interest in the SPV, which is typically taxed differently and on different tax bases compared to the original collateral. Hence, the sponsor can lower the price upon transfer of the SPV and convert what would have been capital gains into non-taxable basis for tax purposes. Yeah, I'm going to write down these little notes here to say, page 18. This is a good one. Page 18, we're also going to go over A and B. And C, the transfer of collateral to the SPV and the creation of interest only and principal only securities essentially converts what would have been taxable capital gains into non-taxable basis. Right here, we're going to star that C. That's the point we want to poke the eyeball of the Illuminati. Boop, right there. B, any gain in the value of the collateral is not recognized for tax purposes because there has not been any sale. Now, in my case, there was a sale. Let me think about this, though. That's what it appears, that I did some sale buying and some other people bought it from me. That's what that looks like. When you do a foreclosure, they're saying that there hasn't been any sale, but the person just got foreclosed upon. The issue is there hasn't been any sale anyways, no matter what, because it's all a trust. So any gain in the value of the collateral is not recognized for tax purposes because there has not been any sale. So I'm going to get number D or letter D and star it and check it. Because my whole thing about going over this is that it's a disguise loan. There wasn't really any true sale. This is all under trust because they're using my credits. Having me pay debt notes, Federal Reserve debt notes, and then having me pay taxes too, and saying I'm the owner. Boom. So E, where the ABS is partly amortizing. Is that American banking system? I think so. Any capital gains are converted into interest payments. Ooh. Let's add E to the list here. Right here, boom. And then F, the actus reus is manifested by the execution of the securitization transaction and transfer of assets to the special purpose vehicle. So F, this is really significant too. That's the area that we're trying to show right down here on the bottom of page 18 or page 58. Thank you so much, Michael Magugu, or however you say your name. The mens rea or specific intent is manifested, it's come to being by the elaborate arrangements implicit in securitization transactions, the objectives of securitization, and the sponsor's transfer of assets to the special purpose vehicle. Wow. That right there is a good one too. G. H, the unpaid tax liability consists of tax on the capital gains from the transfer of the collateral. The transaction is structured to avoid recognition of a sale, whereas the transfer to the special purpose vehicle is effectively a sale. Oh, well, let's write down H. That sounds pretty good. Wow. And tax liability on any income from the collateral, which is converted into basis or other non-taxable forms, interest only and principal onlys, by securitization. So let me try to understand what this says here. So that unpaid tax liability by these, who are these people? Who are they? What are they called? Those agent people? Secret agent man. On the capital gains from the transfer of the collateral, the transaction is structured to avoid recognition of a sale, whereas the transfer to the special purpose vehicle is effectively a sale. Yeah, that's the issue right there. A transfer to the special purpose vehicle is a sale. But the way that they have it structured to avoid recognition of a sale, they're hiding it. It's like abracadabra. Boop. So on any income from the collateral, which is converted, we're talking about those conversion rates. Like your credits, when you go to the car dealership and they check your credit, then they're going to convert that, put it in some type of a special purpose vehicle, not your car, like a trust or something, and they're going to get paid to avoid the recognition of a sale. Boom. Oh yeah, I'm going to have to like find out more about this right here because this is where it's at. Boom. They're doing conversions. Yeah. I mean, it's like a brokerage. It's like a broker thing. It's like a money broker. It's like when you're getting those foreign currency and then you do a conversion of it. It's like, here, let me make this an IOU and we're gonna securitize this. And it's gonna be worth $1 million right here. Boom. Just saying. Or maybe more. These are my notes. These are my notes of the stuff that's going on here that I'm reading. That is worth a lot of money to know this information. We need to know how to execute and get what we need out of it. So let me see. C1, in all true sale, disguised loan, and assignment securitizations, the conflict of interest inherent in the sponsor. Oh, that's what it's called, the sponsor. I gotta find out who the sponsor person is. Who was the sponsor of taking care of my loan deals, whatever? Also serving as the servicer. Oh my goodness, the sponsor is the servicer. Is that like Wells Fargo Dealer Services? Constitutes fraud and conversion. Boom. See our standard legal notes below. That's some really big writing right there. Don't you see that? So I sent this to them. I sent this to them. But they saw that I sent this to them. And they can pretend like they don't even see this stuff, whatever. But boom, right there. In most securitization transactions, the sponsor eventually serves as the servicer of the special vehicle asset pool. I need to know about the special purpose vehicle asset pool. Can you tell me about the asset pool that you have? As servicer, the sponsor determines when there has been impairment of collateral, selects collateral for replacement, and monitors collateral performance. And this is the page, end of page 19. I think I'm going to quit because it's going to be too long of a video. To prove fraud, here we go. Prosecutors must prove several elements beyond a reasonable doubt. There's the actus reus, the guilty conduct, which consists of an affirmative act and not merely an omission or failure to act, of misrepresentation of material fact. In securitizations, the sponsor typically makes material misrepresentations. Yeah. A, the sponsor servicer selects the assets to be transferred to the SPV and the terms of the offering prospectus. Oh, that sounds like, you know what I'm talking about, the trustee and all that of the company, whatever, the trust, where they are, the prospectus. Typically misrepresents the level of objectivity and fairness of the servicer sponsor. Yeah, we got to look at that prospectus. I'm gonna have to do that. The sponsor servicer selects collateral for substitution where there are problems. The past and present disclosure statements and ABS offering documents materially misrepresent the sponsor service's objectivity and fairness. And 2, the mens rea or mental element of willfulness, the specific intent to misrepresent the sponsor servicer's acts, truthfulness, and objectivity, fairness, is manifested by the dual role of the sponsor servicer. I'll just have to say, page 18 and 19 specifically. Can you please read over that? And I'll be sending this to the trustee of the bank. We're going to be sending it to them. Oh, conflict of interest. Mens rea is also clearly inferable from the facts and circumstances. The sponsor servicer clearly has significant economic, psychological, and legal incentives to maximize its profits by delaying substitution of collateral for as long as possible. Command, okay. That's, yeah. Took me a long time to try to get my refinancing. Took a long time. We're talking months. Okay, B, delaying recognition of collateral impairment. We'll be adding page 20 to this. Substituting impaired collateral with substandard collateral, all of which make the sponsor highly unsuitable for the role of servicer. 3, the reliance element. ABS investors rely heavily on the structure, arrangement, contracts, and disclosure statements in securitizations, which are always relatively complex. These forms the primary source of knowledge and valuation terms for the investor. 4, the victims suffer loss as a result of the misrepresentations, whether of direct or proximate causation. Investors suffer loss because the sponsor services misrepresentations of its obligations, fairness, objectivity, and fiduciary duties. So we're going to have to talk to the trustee about the fiduciary duties. Yep, on page 20. Specifically, A, investors' estimates of the values of asset-backed securities are inaccurate and too high due to the servicer's sponsor's misrepresentations. And B, investors incur unnecessary trading costs to rebalance their portfolios as the asset-backed security becomes riskier. C, investors and sponsor servicer incur additional monitoring costs whenever there is any report of impairment of collateral or substitution. Furthermore, in ABS sales process, the underwriter makes certain representations concerning the effectiveness and predictability of the collection process. Under certain conditions, investors relying on such representations may have a securities fraud claim if the servicer fails to perform, such as in bankruptcy. C2, in all true sale, disguised loan and assignment securitizations, and this is bold, look at that writing, where the special purpose vehicle is a trust. That's what we're talking about, folks. Boom. Special purpose vehicle is a trust. Page 20. Okay. The declaration of trust is void. What? The declaration of trust is void. Oh, as it exists for an illegal purpose. Boom. Right here. All contracts struck for an illegal purpose are null and void. Dang, right here, baby. Something the criminal enterprises don't want you to know. You guys, everything is a trust because there's no money. They're using our credits. The declaration of trust relating to the SPZ is PV is void because the intent and purpose of the SPV is illegal and unconstitutional as described in this analysis and in Nwogugu 2006. I think that's Michael's last name, the one that wrote this. But I don't know, is that maybe where he's from? Maybe. This is really good, you guys. So there's a whole bunch of stuff right here, but I'm going to just cut this video off and we're going to have to do the bottom of page 20 for another thing because this video is just going to be too long and people are not going to want to hang. So that was good information. The more I read, the more I learn. And I think it's really important for us to know what kind of contracts or trusts we're getting into. So have a good day, and I'll try to read more as much as I can. Thanks. Please like and subscribe, comment below, and share. I really appreciate that. Thank you.